In the ever-evolving world of cryptocurrencies, market trends and social sentiment play a significant role in determining the value of various assets. Over recent months, both Dogecoin and Ethereum have shown strikingly similar trends, particularly in how they've reacted to shifts in social sentiment. This trend is crucial, as a drop in social sentiment can often indicate waning investor confidence, which can directly impact the prices of these cryptocurrencies. In this video, we'll take a closer look at how Dogecoin mirrors Ethereum in this regard, and why a potential price crash may be on the horizon. Dogecoin, initially created as a joke or meme cryptocurrency, has gained a massive following, partly due to its unique branding and high-profile endorsements. However, despite its meme origins, Dogecoin has emerged as a significant player in the cryptocurrency space. It has seen periods of explosive growth, and like most cryptocurrencies, it has also experienced sharp declines. One of the key factors that contribute to these price movements is social sentiment, how people feel about Dogecoin on social media platforms and news outlets. When people talk about Dogecoin, whether positively or negatively, this affects the number of people who are likely to buy into it, which directly impacts its price. Ethereum, on the other hand, is not a meme coin, but its price movements are often driven by both fundamental factors and social sentiment. As the second largest cryptocurrency by market capitalization, Ethereum is integral to the broader cryptocurrency ecosystem. Ethereum's value is largely tied to its use case as a platform for smart contracts and decentralized applications, dApps. Still, just like Dogecoin, social sentiment plays an essential role in its price fluctuations. While Ethereum is driven by more complex technological advancements, its value is still highly sensitive to public sentiment and social media trends. Over the past month, Dogecoin has experienced a significant decline in both its price and social sentiment. Data shows that Dogecoin has dropped by approximately 31.3%, with a sharp reduction in the number of mentions across social media platforms. As social sentiment for Dogecoin continues to plummet, it is clear that the cryptocurrency is in a phase of waning public interest, which could signal more significant price drops in the future. As we know, cryptocurrencies are notoriously volatile, and a decrease in social engagement could indicate that the enthusiasm surrounding Dogecoin is diminishing, further lowering its market value. Ethereum has similarly suffered from a decline in social sentiment. Over the same period, Ethereum's social sentiment dropped by 22.6%. While this decline is less steep than Dogecoin's, it's still a noteworthy trend, especially given Ethereum's prominence in the market. The lack of positive discussions and mentions around Ethereum on platforms like Twitter, Reddit, and various cryptocurrency forums raises concerns. For Ethereum, which relies not just on speculation but also on widespread adoption in decentralized finance, DeFi, social sentiment plays an important role in driving new investments and keeping current investors confident in its future. As social sentiment has decreased for both Dogecoin and Ethereum, it's essential to understand the potential implications for investors. In the cryptocurrency market, sentiment is a powerful force that can either fuel or diminish investor confidence. When social sentiment is high, it often signals a period of optimism and rising prices, as more people are inclined to buy into a cryptocurrency. However, when sentiment takes a downturn, as we've seen with Dogecoin and Ethereum recently, it can lead to hesitation among investors and, ultimately, a price decline. This is especially true for Dogecoin, which has largely been driven by a community of enthusiastic supporters and a viral online presence. What's important to recognize is that social sentiment is not always a reliable indicator of a cryptocurrency's long-term potential. While a decrease in social mentions may indicate that short-term momentum is waning, it doesn't necessarily mean the cryptocurrency's underlying technology or use case is failing. Ethereum's decline in social sentiment, for example, is likely tied to the broader market trends and the overall slowdown in the growth of decentralized finance. Yet, despite the dip in social media engagement, Ethereum's foundational technology still holds immense value, and its use cases are likely to continue evolving. On the other hand, Dogecoin's reliance on social sentiment is much more immediate and volatile. As a meme coin, its value is heavily influenced by the attention it receives from the public, particularly on social media. When attention wanes, so does the enthusiasm to buy or hold Dogecoin. This creates a boom and bust cycle that's much more pronounced than with Ethereum, which has a broader range of use cases and institutional support. Therefore, while Dogecoin's price can be more volatile, it's also more susceptible to the effects of shifts in social sentiment. So, what does this mean for investors? Both Dogecoin and Ethereum's recent declines in social sentiment should serve as a warning. The impact on price is real, and investors should be aware of the risks involved. While Ethereum has solid technological support and is part of a growing ecosystem, its price could still face pressure if social sentiment continues to fall. For Dogecoin, the situation is more urgent, as it depends largely on public enthusiasm and social media buzz to maintain its value. A continued drop in social sentiment could result in even greater volatility and a further price crash. Investors should exercise caution when considering investments in cryptocurrencies, especially those like Dogecoin that rely heavily on social media trends. It's important to conduct thorough research and consider the fundamental factors at play before making investment decisions. While short-term price movements may be influenced by sentiment, the long-term potential of a cryptocurrency should not be disregarded. Ethereum, for example, continues to be a leader in the smart contract space, and its value is largely driven by its technology and adoption, despite recent dips in sentiment. The key takeaway here is that while social sentiment can have a significant impact on cryptocurrency prices, it should not be the sole factor guiding investment decisions. As we've seen with Dogecoin and Ethereum, shifts in sentiment can signal short-term price movements, but they do not necessarily indicate long-term viability. Investors should take a holistic approach, weighing sentiment alongside the fundamental factors that drive the value of these digital assets. In conclusion, both Dogecoin and Ethereum's declines in social sentiment are notable, but they don't necessarily spell the end of these cryptocurrencies' potential. As with all investments, it's crucial to stay informed and be cautious. In the volatile world of cryptocurrency, making informed decisions is the key to navigating the ups and downs that are inevitable in this space. By keeping an eye on sentiment trends, while also considering the long-term value propositions of the cryptocurrencies you're investing in, you can better position yourself for success in the rapidly changing market.